Thank you for tuning in to the Tax Insights podcast. In this series, the professionals at Hawkins Ash CPAs break down complex tax topics into bite-sized how-tos. Businesses are being bombarded by urgent employee retention credit communications from companies trying to get them to file for the credit. In this episode, Jeff Dvorachek, a tax partner at Hawkins Ash CPAs, shares a word of caution to business owners and some insight into whether or not your company should pursue the employee retention credit.
I know as a business owner, you're probably getting a lot of correspondence in regard to the employee retention credit, whether it's coming via letter, whether it's text messages, phone calls. There's companies that are out there that are just peppering businesses on trying to get some of this free money from the employee retention credit.
Right. Because if I remember correctly, it's a credit of up to $26,000 per employee, correct?
Yeah, and that's a legitimate number. It is literally up to $26,000 per employee if you qualify.
Okay.
And that's the biggest thing with these companies.
So let's talk about that, because that is a key word here, if you qualify. How do you know if you qualify? Who qualifies? What are the requirements of qualifying for this?
The biggest way that a company would qualify for this credit is if they had like a substantial decrease in sales. Real quick, so if you have a 50% or more decrease in your total revenue compared from 2020 to compared to 2019, or if you have a 20% reduction compared to 2021 compared to that same quarter in 19, kind of post-pandemic versus after pandemic, if your sales really went down during the pandemic period, you may qualify. There's a second test also, but that's the biggest one that the IRS is looking at, is that decrease in revenue.
Okay. So what are some of these, shall we say, these ERC mills? What are they not telling you? Because there's always that catch, right?
Right. So, if you're working with an accounting firm, Hawkins CPA or whoever it is, they've probably, and we have done the test for all of our clients.
Sure.
To see, do you qualify or don't you qualify? And that's the one thing that these third-party companies, they don't know. So they're just peppering companies with letters. And they're saying, I'm sure you're going to qualify. Absolutely sure. For us at Hawkins Ash, we use that bright line test, the gross receipts test. But there is that second test, which is kind of a facts and circumstances test. And these third-party companies are really pushing that envelope and saying, even if you, stubbed your toe during that period of time, you qualify for this credit. And so they're trying to get everybody to qualify, which is not true. And the IRS has said it's not true.
Yeah. And that's why I guess, it's so important to surround yourself with experts and professionals that can guide you in the right decision, because I would imagine you don't want to go down a road that you don't qualify for, correct?
Well, that's right. Because, one of the things is these companies, they'll take 20, 30, maybe even 40% of the credit as their fee. And if you have to pay that credit back later, you still have to pay the credit 100% back. And some of these companies that you're working with, they may not be around anymore to collect their fee back.
Yeah. And not even know how to connect with them either.
That's right.
Yeah. So what do you do next, Jeff? Last question. You're like, what to do next?
So really, if you haven't talked to your accounting firm about the employee retention credit, definitely do that. But if your employee, if you don't qualify for it, I would just ignore all these letters, and they're going to look official. They're going to look like IRS forms. They're going to look like a real official form, and they're going to want you to do something right away. But at that point, if you don't qualify, just ignore it, because it's just going to end up being a waste of time at the end of the day.
And a huge headache and a very costly mistake.
That's right.
There we go. Jeff, how do listeners connect with you and the team over at Hawkins Ash?
I would go right to our website, which is hawkinsash.cpa, and go to our CPA HQ section.
Awesome, Jeff. Thank you for your time. We'll talk to you again next week.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.